Hey guys, can you hear me? I want to make sure the audio is working because I was having a little bit of a problem with my microphone. So let me know if you can hear my voice and if you can hear it clearly. By the way, I am recovering from COVID, so my voice may sound like a horse, but so I'm going to speak very slowly this time. All right, sounds great. So who do we have online with us now? Uh, Carlos, how are you? So just a very quick intro here, guys. I mean, if you are a part of Viet Maxim family, I've been kind of like away for a while because I've been just so busy. Didn't have much time to work on videos, but I got quite a few requests about sharing some of the experience I have with trading, either crypto, stock, doesn't really matter because whether trading crypto or stock, it's really just the same thing. What you really need to do is be able to look at the chart and identify pattern. Really, that's what it is. So that is what we're gonna try to cover. Excuse me. By the way, I'll probably be coughing a lot as well. So bear with me on that, okay? One of the things to keep in mind is this. First of all, anybody can trade. I mean, as long as you can click a computer button, you can trade. But to be able to consistently make money trading is not easy, okay? Because you're looking at making money from trading the same thing as like, oh, that is like a job. And any jobs, in order to be good at that job, you have to take the time to learn. I mean, look at this way here. If you ask me to fix a car, there's no way I can do that. But if I just like naive enough to say, well, I'm just gonna watch a couple of videos on YouTube and then I can go and become a mechanic, it's not gonna happen. I'll probably mess up your car. Same thing with trading. And that's why when you look at I mean, reading articles about like how does the retail quote unquote traders do, I mean, the statistic is like 95% of retail traders lose money. And the reason they lose money because they are naive to think that hey, it's easy to make money. All they really need to do is like watch a couple of videos on YouTube and they can do that. Hey Bob, how are you? So just keep that in mind. What I'm going to try to do is I'm going to share with you some of the experience I have with trading. And definitely, it's impossible to do it in 1 or 2 hours. So what I'm going to try to do is turn this into like a series of live streaming session. And every time when I go live, I will share with you something different. The key thing is if you are interested in this, download some of the what software that I'm using, which I will recommend, and spend some time. I mean, look through, learn from it, and start with like trading, paper trading. The minute you feel like you're ready to go, ready to go, then you can consider even trading with real money. But first thing is uh, trade with a very small amount because there is a 99.9% chance that the first time when you start trading, you are going to lose money. I mean, that's just part of what I call is an unusual investment in I mean, look, if you want to be a doctor, like or in any profession, you have to make the investment to pay for the learning. This is the same thing. But anyway, first thing I want to talk about is like the tool. I mean, what do I use? When you watch video on YouTube, you see guys, professional traders. I mean, they have a setup like 4 or 5 monitors. I think that's definitely overkill. For me, All I have is like a desktop with two monitors. You don't really need two monitors. All you really need is one either desktop or laptop computer. Even with just one monitor is fine. I mean, you don't really need a lot. Hi, Sunflower. You don't really need a big setup because for me, when you, I mean, even for me right now with two monitors, sometimes it's very distracting. Just imagine you have like 4 or 5 monitors. There is no way in the, I mean, there's no way that you can actually be able to observe all of those things. And so that's the first thing. So for me, hardware, just a laptop with a good screen or a desktop. I mean, I prefer a desktop because I like to use a real mouse instead of a mouse on my laptop. The second thing that I use, I mean, the second thing is trading software. If you are thinking about trading stocks or stock options, then TD Ameritrade. Well, I mean, hey guys, this is about like day trading. We will get all the questions relating to crypto at the end of this. Okay, so let's do that. And one of the things is this here. Well, let's go back. I get a little bit distracted, but so what you may want to do is look at this software, Think or Swim. It's free. All you need to do is create a free account with TD Ameritrade, and then you can either download a standalone desktop version of Think or Swim, or they also have a web version that you can use. This to me is probably one of the best software for trading stocks. It's really sad that TD Ameritrade does not support crypto. Otherwise, I mean, this would be ideal. Now, if you're looking at like trading crypto, then I would recommend to go with like Trading View. Trading View, you can register for a free account, but then there's a lot of limitation. But in the beginning, I think just use the free version is good. I mean, when you start trading for real and all that, then you can think about upgrade to a. I think they chart like it's really depend on uh, what membership structure you use with them. I mean, different like level. It the cost is like I don't know like $9 or something like that. So um, so this is the software. All right. So today what I like to do is this here. Like I said before, really, I've been trying to understand all of this. It takes time to do that. And I will do that like I will continue to do this like live streaming. And every time when we do the next live streaming, we'll talk more about different indicators, what to look for. So today, um, we'll briefly go through like support resistance. To me, this is probably one of the most important thing that you need to master if you are thinking about trading. And then I will go through briefly with the trading strategy. I mean, normally, what do I do in terms of like pre-trade planning? Pre-trade planning is very important because I mean, you need to spend some time to do your homework before every trading day. So at least you have an idea of exactly what you plan to do. The key thing is you just cannot just start a day and just randomly go in and trade. No, I mean, when you do that, you will lose money. I mean, think of trading like you are going to war. You have to plan what you plan to do before you head out to battle to increase your chance of winning. Trading is the same thing. And as part of this pre-trading planning or pre-trading plan, it's also help you to minimize the human factor, which is I will go through in a little bit, because the human factor, the greed, the fear, that is what caused you to lose money. I mean, I would say that the 95% of retail traders lose money because they let their emotion dictate how they trade. Okay. If you can minimize that, you would definitely improve the percentage of winning. So that is extremely important. My screen is out of focus. It does anybody else have any problem like that? It could be your internet connection. You may wanna look at that. All right. Next thing is I'll talk a little bit about one of the trading tips. So let's say if you are trading right now, you can apply this tip right away. Okay, and the tip that I'm going to talk about today is really play the momentum. I'll go over and explain what I mean by this. High probability of continuing, let's say, a downtrend if yesterday's high is lower than the prior day's high. So let's say when I do my pre-trade planning, I look at like how the stock, the a specific stock that I want to trade today, how it performed yesterday as well as the day before. Try to determine the momentum. And by looking at this here, it gives me a very high probability that whatever that I am predicting likely will happen. I mean, this is a very, it's been working really well for me, and I will go over that. Yes, COVID did not get me down because I'm glad that I had the booster. And lastly, I think this is very important, is I will go through an actual trading simulation that will actually see the whole trading process and how I would go about in terms of identifying when is the best time to place the order and when to exit a trade. So I think in the beginning, let's say if you have not traded before, it may be a little bit like confusing, but slowly, trust me. I mean, this thing is not difficult. I mean, it's. And what I'm going to do is I will keep these live streaming on, the video on, so you can always go back and refer to this if you are serious about learning. Well, remember this here, either like either you want to do like day trading, or if you just want to be able to read chart so that you can quote unquote invest in crypto or stock. I mean, you watch my video, you see how I go about analyzing a chart. By looking at this here, you'll be able to do pretty much the same thing like I do as well. All right, but anyway, um, and if anybody interested in learning this, I mean, I do offer like one-on-one support consultation. If you're interested in that, just email me at hellovitmaxim at gmail.com. All right, or like just send me a message. So anyway, that is what I am planning to do today. And at the end of this, if you have any questions about like crypto or anything else, I mean, we can go over that. By the way, super chat is greatly appreciated. All right, let's talk about like support and resistance. And I will go through this very quickly. I know, I mean, the majority of the people here probably know what it is. But for those who are new, I just want to quickly go over this because remember this, like I said before, for me, support and resistance is extremely important in day trading. If you think that you know what it is, but if you have problem kind of like predicting where the support is, the resistance is, you're not going to be able to make money. So this is very important. All right, so let me go through this here. This is the chart from Thinkorswim. Okay. First of all, when I trade, people ask me how many stocks do I monitor. I mean, you watch video on YouTube, you see guys that they have a list of stocks that they monitor, like 10, 20. Some guys even have a software that scan stocks based on certain trading pattern or based on like news because they want to leverage that. I mean, take advantage of a change, either like a earning or whatever that is. I mean, they trade based on that. For me, that's just too much work. I don't do that. All I do is I just follow 4 stocks. That's it. And I just trade in and out with just 4 stocks. Why do I do that? Because the way I see is here. If you follow one single stock or 4, let's say 4 stocks every day, you have a better understanding of how the stock would behave, the patterns. That's all I need because seriously, all I need to do is just follow one stock and I can easily make the kind of money that I want with just one single stock. So don't waste too much time or money. I mean, buying like all the software about like uh, stocks trending, the list of stocks that you used to follow. I mean, you just don't have time to do that. The whole concept for me about trading is keep it simple. The simple it is, the easy it is for you to be able to follow, for you to be able to master that, for you to be able to increase your chance of having winning trades. And just think of it this way here. If I were to chase after like stocks with earnings, I mean, how many do you have to follow every day? How many articles do you have to read? And not all the time. I mean, how many times you see that a stock that after they announce their earning, the stocks move up. But the minute they have the earning conference, whatever that the CEO say, it may change it completely. I mean, I've seen stock that go up like 8% right after they report the earning. But during the conference, the CEO say, "Oh man, next quarter looks like there would be certain headwinds." Then all of a sudden, I mean, it goes from like plus like 8% down to like minus 8%. So I mean, all those things, and why bother with it? So if you trade stocks, just find 4 stocks that you like, or even 2. I think in the beginning, just 1 or 2. If you like to trade options, just make sure the stock that you choose have a very wild swing because options, you really want to see the stock move up and down a lot. So this, what we see here is the chart from Think or Swim. Okay, so it's really cool. I mean, you can do a lot of things with this. Let me just zoom this so that we can see a whole day. This is the chart, actually 2 days chart for square or block. Let me just kind of like quickly go through this. This shaded area is pre-market trading, and this is like after hour trading. The darker this area here is during regular trading hour. All right. So let me just quickly go through this, and then I will get to like the support and resistance really quick. Yesterday, the stock closed at this point, and as you can see, during like after hour trading, the stock drifted. And early this morning, right after it opened pre-market trading, the stock went up. It opened low. But then there was a news regarding to, I think Macy, regarding to retail sales. Macy report a really good earning, and they are revising their sales forecast for this year. So basically what happened is everybody were worrying about like recessions. And if Macy were to report really like poor sale, that would really cause the market to crash because hey, if people stop buying, that's when you have to worry about recession. But fortunately, Macy reported good earning. And now the whole market is looking at this. Oh wow, I mean, all of the stocks, especially tech stock, get beaten down so bad. And there may not be, I mean, the probability for recession may not be there if people continue to buy and stuff like that. That's why we see the stock move up. And now, look like, I mean, after hour, I mean, it's very stabilized. So based on this year, I mean, what we can do is we can guess that tomorrow, assuming there is no bad news, the uptrend momentum could continue. I mean, and we may have another good day tomorrow. If that is the case, that would be great because that would be like the first time that we have like, I mean, back to back update for the market. And when the stock market goes up, I mean, it's also helped like the crypto, Bitcoin as well. I mean, right now we all know that Bitcoin is really, I mean, it's having a lot of trouble right now because, well, the fear of recession. When the stock market goes down, it tends to have that impact on the crypto. The second thing is, I mean, with what happened with Luna, that's really scared a lot of people. So retail investors are belling. I mean, that's one of the things. And then later on, I will talk about crypto. I mean, that's why now, especially now, it is a great time really to invest in crypto because the price is really low. But it is extremely important that when you select the project that you invest in, you have to spend some time to do some due diligence because now it's different than a couple of years ago. If you just throw money into like, I mean, hype coins, you are going to lose it all. I mean, that's really the key. Now it's different than before. When you invest in crypto, you have to make sure that you choose a project that can actually outlast this sort of like crypto winter and make you money once the market pick up. And that could only happen if a project has certain utility. All right. So let me just quickly go through like support and resistance. Let's do this here. Let's just zoom in so that we can actually follow today's trading. This is a minute by minute chart. When there are more supply than demand, the stock price drop, as you can see at this point. The minute the stock dropped to certain level where buyer stepping in, that is what we call a support. And normally when you look at the chart, support tend to occur. Let me draw this. If we look at like this point here, this is the support. And why all of a sudden we have a support right at this point? Because support tend to happen at the resistance of somewhere in time. And today, when we saw the market retrace and then it bounced up, it hit this point, then it retraced. And then it bounced up. The minute it retraced, as you can see, it hit this prior high. Now this become a support. So the nice things about Think or Swim is I can even plot that. So let's say I am trading right now, and assuming all I have is the data to about right here, I would plot something like right here. Okay, this could potentially be my support right here. And at this point, the price retraced. So this is my resistance. So resistance is red. Support, I tend to change the color to green. All right. So that is like the first few minutes of trading. I already starting to kind of like see some sort of support and resistance. Now, if we continue at this point here, retrace to about right here, which is that is right at this level during pre-market. It finds support. The price stabilized. As you can see, it's trading sideways. And then after that, it bounces up. All right, here is a tip. Let's say, let's go back to this. I want to make it. Let's say I am right at about this, from here to here. How do I know if the next candle is likely, I mean, high probability of going up instead of like trending down? This is how I see it. So let's say after this candle finished, you look at the next minute candle, you see that the wick of the candle, the high is higher than the top wick of the prior candle. Then there's a very high probability that the uptrend would continue, and especially if the high here is higher than this one and the low here is lower, is higher than this low here. Even though this is a red candle, but this is an indication of support. There is a very high probability that the next candle would be an up candle. As you can see, the trend continues to go up. The high here is higher than this. The low is also higher than this low here. That's why we see the next candle up, and it continued to trend up until we're starting to see some sort of reversal at this point, because the high for this candle is lower than the prior high, and the low is lower than the prior low. So all indication, I mean, high probability that the next few candle would start the shift in the trend. So that's a tip there. Look at the candle, and you can predict the probability. So let's say, why is it so important? Assuming if I want to trade in and out, first it went to the top here, and then it started to retrade. Now, okay, I mean, it's kind of like trading sideways. All of a sudden, I'm starting to see these two candles here. Now, this is telling me that there's a very good probability, and remember, nothing is perfect, so it may not work in certain cases, but the majority of the time, I would say 60% of the time, this tend to work out really good. And 60% of the time is what you need. I mean, the odds is favoring you. I would just go in and buy here. And then the minute I see the pattern start shifting, I could start my sell order and just take advantage of that. I mean, that's one way of doing that. All right, let's just go back to, all right, so now go up, it started shifting direction, retrade. As you can see, the minute it hit this prior high, that is your support right now. Then, as you can see, it started reversing direction. And just like I said before, the key is looking at the candle. The high for this candle is higher than this one. The low is higher. So the probability for the change in direction is very high. And as you can see, next candle, you see that. This candle here, even though the low is lower, the high is lower than that, but because of the low is still higher than the prior low, the probability is still there for the trend to continue to move up. So it continued to move up to this point. At this point, that is the resistance. And then it retraced to this point, find support. If we just draw a line, this support here tend to be right at this line. I draw that. Very close, you see that? Let me, okay. Right here. So, found support right at this point because the high was at this. Then it bows. Resistance. Retrace. So basically what it is, support is an area where you have more demand than supply, which is it stopped the price from dropping further. So let's say this price starting at this point, you got more seller, so they continue to push the price down. I mean, everybody wants to sell their share, so they want to dump it. So when you do that, let's say I start with like $1. The next guy want to sell it. He may want to sell it like 98 cents. Nobody buy, down to 97. I mean, continue to drop like that. So after a while, let's say it dropped to about 70 cents. At 70 cents, you have a bunch of buyer here. Okay, they really love the stock, but they don't want to pay $1 for it. So they put in buy order at 70 cents. So the minute the price dropped to 70 cents, then it's starting to bounce up because all these guys want to buy. Let's say I bid 70 cents, all right? But the next guy bid 71 cents. Next guy bid 72 cents. So continue to bounce up. And then once it gets to $1, most likely there may be some seller that set the price at $1. But because the price kind of like retraced so fast, their orders did not get filled. So what happened at this point is their order would get filled, and likely that it could cause the price to retrace. Next time we go through, we'll talk about like the potential for what we call is like a double top here. This is, I mean, we had a scenario where it creates something like a double top. But let's say if there's a lot more demand for the stock than supply. So let's say the stock go to $1, it may drop down to about 90 cents. And then more buyer coming in. So it go up, it go to $1, $1.01, $1.02, continue to trend higher. Until a certain point where there's more seller, it would cause the price to retrace. So if we look at like the stock for, I mean, how the stock price behave for a square or block today, I mean, that gives us an example here. Open, move up, selling, retrace, up, retrace until it hit this spot here. Because there's a lot more people want to buy, so now they push the price up to this point. You have more selling, drop. At first, it drops below the prior high, but then there's still more buying demand that continue to push the price up. Go up, retrace, and then at this point here, I mean, this is a good example where we have like really strong resistance. It go up to this point, and then sellers push it down. It retrace, it finds support rate at this prior high, as you can see right here, and then it started to bounce up. But the minute it hit this prior high, it get rejected. Retrace, retest this point, and then it bounce up again. The minute it tests that, it retrace. So at this point here, there's a lot more seller. They want to sell at this price. But at the same time, because today, good news regarding to retail sale. So there's a lot of people want to go in and buy Square because look, Square was trading at like 260 some last year. And right now it is trading at about 80 bucks. And it's a great company. So there's a lot of people out there that I want to get in. So the minute buy a seller push it down, buy step in and scoop it up. I mean, that's why you have this phenomenon here. Now, understanding support and resistance. So let's say, I mean, I know there are people who are scalping. I don't scalp. I mean, in some way. But if I want to do that, I can easily look at this here. I see the minute it dropped, it started to bounce. I could buy here and then just sell it right before it hit this prior high. And then just wait, do the same thing here. So I could have 2 trades here and make about like, I mean, $1.30 per trade. Think of it this way here. If you start with 100 shares, I mean, that is like 150 bucks for that you can make 130 bucks per trade. If you do 1,000 shares, I mean, that's like 2,600. So the idea is what? Just like I said before, you don't really need to follow a lot of stocks in order to make money. To me, the best way, the easiest way is just to follow just few stocks. I mean, for me, I follow 4 stocks. When I trade, I tend to trade one stock. I mean, I just key on that stock and try to make money. Okay. First thing. The second thing, so that's support and resistance. I mean, and next time when we do another live stream, I will go over that because I mean, there's just a lot of scenario that we can go over. But as you can see, when you do day trading, especially scalping or trying to leverage how the stock move up and down to make money, you have to be able to master. I mean, you have to master support and resistance and all of that. And another thing is, let's say support and resistance tend to occur based on how the price behaved in the past, as well as like certain major indicators. So let's say I have this red line here, this thick red line. What is it? Okay, this is the 10 days moving average. Normally, based on what I've seen, is every time when the stock get close to certain moving averages, like the 10 days, the 50 days, the 200 days, you're definitely going to see some sort of reaction relating to that. Let's say if it's trending up, and the minute it tests the 10-day, most likely it's going to retrace. And it really depends on the momentum of the market. If the sentiment is like bad, let's say the past couple of days when we have like, I mean, really bad news about like the potential for recession and all that stuff, you could see this thing swing all the way down and cause this completely collapsing price. And I will show you some examples. So it's very important. Um, and that's, I mean, in a little bit when I go over like the pre-trade planning, I will show you why I go through and look at all of that. It just give me kind of like a gauge uh, to 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 determine um, how the price would behave if it hits certain point. Okay, so all right, that is quickly that is support and resistance. All right, so now let's talk about like trading planning or like doing your homework before each trading day. Here is this for those people who do not have time to do day trading. I mean, you don't really need to spend a lot of time in front of a computer to trade. I mean, you can follow the concept that I'm sharing here. And in the past, what I do is normally I spend about like half an hour before the market open to do my pre-trade planning. And then I log in after the market open and just follow the price for about like half an hour to 45 minutes. And during that time, I tend to, I mean, either buy or sell. And then before the market close, half an hour before that, I tend to log in and observe that and then do either like buy or sell for the following day. I mean, buy or for the following day or sell for any position that I opened the prior day or in the morning. So ideally, I mean, you don't really need to spend a lot of time. But let's say if, hey, if you have the time and I mean, you can observe the chart, then, you know, you can pretty much follow this as well. Hello, Ann. Hello, Adam. I hope this is not boring, guys. I mean, if it is boring, just tell me, okay? All right, so pre-trade planning. All right, Bob. If you trade, if you do day trading, I tend to follow the 1 minute chart because sometimes I can buy and within a matter of 5 minutes, I can exit my position and very much done with trading for the day. And I will show you in a little bit. All right. So what's really nice about Think and Swim is what they have is they have an on-demand simulation. You can actually look at the data of you can look at like the trading data in the past and then study that. Okay. And that's why it's really good because once you download this, I mean, you can pretty much like practice it when you have time. Like I said before, if you never trade before, don't trade with real money right away. Practice. And the minute you feel that you're really good at that, the nice thing is this, let me just click this on demand. And then when you click the on demand, you can pick any day in the past. So I pick like May the 3rd, 2021. Why do I do that? Because I want to give you an example that one of the trading tip is play the momentum. Okay, what does it really mean? When I do my pre-trade, okay, I tend to observe how the price behave in the past. So let's say, let's look at like the past 2 days. Um, let's say yesterday, it it was a bad day. So we have a red candle like that. This is a red candle. I mean, okay, let me draw it like red candle. that. And then the day before that, it was a good day. Well, it was, let's just make it like also another red day. But it it kind of like, let's say, looks something like this. So the trend is down. The high of the day before yesterday was higher than the high for yesterday. The low for the day before yesterday was higher than yesterday. So when I look at this here, the trend is definitely down. So there's a very high probability, assuming if there is no significant news that could influence this, there's a very high probability that the trend would continue. And as part of my pre-trade planning, I would plan to trade either like short it or buy put option, because there's a very high probability that the price would end up closing lower than yesterday. So the tip that I have today is you play the momentum. There's a very high probability of the downtrend to continue, meaning that the price today would be lower than yesterday if the high for yesterday is lower than the high for the prior day, and the low for yesterday is lower than the low for the prior day. And what's really important is if the closing price, which is right at this point here, this is closing, is lower than the closing price for the prior day, this is just like a trifecta to make money, basically betting that the price would likely close lower. Okay, so based on my experience, at least 65% of the time, this turned out to be the case. But just like anything else, I mean, nothing goes like 100%. That is why you have to look at like how the price behave to determine, hey, if you bet on the price would drop and all of a sudden you see it's starting to reverse, you got to get out. Okay, so pre-trade planning allows me to do all of that. Another thing that's really important, I mean, I will talk about this during the next live streaming, is when you do tradings, the fewer trades you make, the more money you're going to make. I mean, that sounds ridiculous, right? Because we tend to think that, hey, if I trade the first trade, if I make $100, and if I do 10 trade, I would make $1,000. I mean, it's, but that's not the case, because the more trade you make, the more probability that you are going to have losing trades, and then you probably end up lose money. For me, I make 1 or 2 trades a day. That's it. Why? Because if you want to make money, you have to be patient enough to just sit and wait until all of the patterns and all that kind of like matches what you want to see. Or, I mean, basically, when the setup favor you, that's when you enter that. And one trade, I mean, you can make $1,000, $2,000, $3,000. You don't need to do multiple trades. I mean, I saw a video on YouTube, guys talk about scalping, and they're saying, oh man, if I do like 30 trades or even more a day. Trust me, those guys are part of the 95% that lose money. All right. All right. So the tip today that we're going to talk about, and later on I will show you an actual day that this thing works out really well. Okay. And just like I said before, if you're interested in trading, I mean, this trading simulation here will, you will to see what I mean by that. So let's go to a pre-trade planning. All right, so normally before the day open, I mean, I spent half an hour like observing the chart. Now, when I look at this chart here, this from here to here is one day, which is, let's just call this like yesterday. And this is the day before yesterday. So the high for yesterday is right at this point. So let me just draw something, a line that would give me an indication that is like yesterday's high. I mean, I can even put a label on it. So let's just call it like day one H for like high. So this is the high for day one. And the low is at this point here. So let's just draw a line at this point. And I would do the same thing. I'm going to label it like day one low, which is L. So this is high, low, and now I want to look at the closing price. So let me just zoom in. Right here, it closed at this point. So I'm just going to draw another line to give me, okay, at this point, and I tend to choose a different color. All right, so basically what I have here is a high, yesterday's high, low, closing price. Now, because I want to see what sort of momentum or how the stock has been trading over the past few days, I look at the day before yesterday. The high was higher. So let me just draw this here. Use a different color. So this is day two high. By the way, I mean this sounds boring, but trust me, if you are like thinking about like trading, this is where people charge a lot of money for. So day two low. So I'm just gonna plot that. So this is day two low here. So I got a high, low, and the closing price. Now I'm gonna plot my closing price. So my closing price is right at this point. All right, so in a nutshell, what I have here is really, I mean, it's a downward momentum. And the closing price of the day before yesterday is higher than the closing price for yesterday. So definitely it is. All right, so let me just draw this. So now the high for yesterday is lower than the prior. And if we look at like the tip or the example that I have, that's exactly what we're seeing here. Yesterday's high lower than the high for the prior day. And the low is lower than the prior low. Closing price is lower. So let's take a look at this again. This is what we have. This here is lower than that. Low was lower than the low for the prior day. And the closing price is lower. So when I look at this here, immediately my plan would be to short this stock when it opened. Because if there's no major news, most of the time the stock would trade and close lower than this closing here. Another thing is, we talk about support and resistance. I also want to identify at certain point it may see support or resistance. And I talked about before, one of the indicator that I tend to look at is like the moving averages, because whenever the stock hit certain moving average like the 10-day or the 50 days, it tend to find either support or resistance at those points. So what I would do is I would draw by looking at the timeline. I look at like 1 year, and then I would plug in the moving averages. So this is what I have here. This red line here is the 10 days moving average. So it's close at this point. So what I'm going to do is I'm going to draw a line right at that point. So that would be a reference for me that at this point, it is the 10 days moving average. Okay, so now I'm going to label it 10 DMA. So this is the 10 days moving average. And this line here is the 200 days. And the white line is the 50 days. So I draw the 50 days. I think this right here, 50 days. So it's 50 DMA. All right. And this one is all the way down, so I don't really care about that. Now, what I'm going to do is I'm going to remove anything that I don't really need. All right, so when I go back to look at the timeline, let's say for the past 3 days, 1 minute, now I have this line here. Okay, right here, the red line is the 10 days moving average. Let me just extend it to the left so you can see that. And at this point, okay. So when we look at like 1 day, the price yesterday, it closed below the 10 days moving average. So most likely assuming when the market open and somehow if the price goes up, the minute it gets near the 10 days moving average, there's a very high probability that it would get rejected. Why? Because the trend is downtrend. So if I'm lucky enough, let's say the market when it first opened, it opened higher, and then it run to about like near the 10 days moving average. At that point, the minute I see the trend starting to reverse, I would definitely go in and then short the stock at that point. So next, what I do is, interestingly, during pre-market, the high and low during pre-market can also be a very good gauge for support and resistance. So I also plot that. So for our exercise, I am going to put 629. That would show us like the pre-market before actual trading here. So I would go in, I would just plot another line. This is the high that the stock trade during pre-market right here. So now I am just going to give it a different color. That signaled to me that, hey, during the pre-market, the stock actually went up as high as this. And duplicate that. This is the low. Okay. All right. So for today's exercise, I mean, this is really, I mean, that's enough. I also have this like line, what is like the pink line. It's called a VWAP. I will go over that during the next live streaming, but not today. All right. So after I do that, I just remove I don't want to show the extended hour trading anymore. So right now, this is what I have. So this is yesterday, and the market just opened. Let me zoom in on this. So this is at 6:30 a.m. Pacific Standard Time, the market opened. As you can see, because it traded up during pre-market, it opened high. Now, one more thing that I do, which is really important, is follow the first minute of trading. The first minute of trading tends to give a very good indications of how the price would likely behave the rest of the day. So what I do is the same thing. I look at the low for the first minute, which is at this point here. Map that. So duplicate that, and this is the high for the first minute. Let's just zoom to this point here. Okay, why is it important? Now, as you started trading, and I will show you during the next few streaming session, there are times that, let's say, after the price opened and the minute it dropped below the low of the first minute, a lot of time it will continue to drop lower. So the high and the low of the first minute is a very good gauge for support and resistance as well. All right, let's go back to this. So, all right, the tip that I give is like based on the momentum, because what we have here is the Dow trend. Yesterday's high and low, lower than the day before high and low, and the closing price is lower than the closing price for this. But when the market opened, you can see right now the price is going up. This, what we call, is potential for a bull trap here. So let's say if people are not aware of observing this sort of thing, they may think that, wow, the market is trending up, so I'm just going to buy it because it's going to run higher. And in a little bit, I mean, here we are actually observing minute by minute here. Okay? And like I said earlier, if the high of this candle here is higher than the high of the prior candle, the trend tends to continue to go up. All right, here's the key. Remember I said what I would observe is, this is my 10 days moving average here. I am betting on the fact that this thing would trend lower. Now I am observing it cross over the 10 days moving average. All right, am I wrong? Well, let's wait and see. Because if somehow the price starts to retrace and then it get rejected at the 10 days, that's when I would likely jump in and buy either a put option or short it, because I'm betting on this thing to trade lower. So now, as you can see, it is hitting the resistance. It's starting to trend here. And all right, let's just see this. This is we're actually looking at like a minute by minute trading. So it's a little bit boring, but like I said, if you're serious about thinking about trading, I mean, this is extremely important. And by downloading the software Think or Swim, you can actually go through and do this yourself. So now, as you can see, it's starting to get resistance now. All right, so let's just zoom in on this. The high for this candle here is lower than that. And because of the fact that I'm betting on the price will eventually retrace due to the momentum. And now I am seeing that it is having a tough time to cross over this high right here. So, and this candle here, the low here is lower than this, and the high is lower than this prior high. I'm just going to wait for the next candle. If the next candle show me that the low is lower than this, I would jump in and I would buy my put option, or I would short this. And my exit price, if I'm wrong, would be right above this line here. Because the minute I'm wrong, I rather exit right away than just sit and wait. So at 248, and if it hit over 249.5, that when I'm just going to buy. Hey, now if this candle here, let me see if I can clear this. Now it's lower. All right, I'm just going to buy or buy put right here. Okay. And after I do that, I'm going to draw another line here. I got this high, and I have a high here. And then this low here, I'm just going to draw this. Because most likely, this could potentially be my resistance trend line. Now, one of the important thing is like when you buy, I mean, this is like during pre-trade plan, you have to determine at exactly what point in time you want to get out, how much money you make. I buy or I short it right here at this point here. Let me just draw it. Okay, so I short it at this point. And if I'm wrong, if the price get over this, I have to get out at this point. So now, if I'm right, how much money do I want to make? Okay. It really depends. A lot of people say like 2 to 1, 3 to 1 ratio and all that. For me, it's just a matter of like, I mean, looking at the potential support and resistance. So let's say for this case here, assuming I'm just saying, okay, I will, if it dropped to about like the low of the pre-market trading, then I would exit. The idea is if that is my target, the minute the price dropped down to that, I would sell it. I mean, no if or but. People lose money just because they get greedy. Let's say if it continued to drop, and then they can say, oh, if I wait another minute, it may drop even more, then I can make more money. But you know, with like uh, I mean, these things are very unpredictable because instead of dropping more, it could potentially rebound. And then the next thing you know is like all of your gains is gone. But as you can see, so far, it seemed to work out really well. I mean, you know, I like this. Low, the high here is lower than that. So there's a very good probability that, you know, it would continue to trend lower. We are looking at like a minute by minute. So there's, you see here, okay. When I look at this here, I don't worry about this because right now my plan is what? I'm not gonna do anything, even this thing go up like that. But the minute it get over my exit price, which is right here, that I'm out. Because a lot of times you could see this thing move up and then it get rejected. And then move up, get rejected. Eventually it would hit my target here. So right now it's looking good because I'm continuing to see the high for the candle is lower than prior high. So the low is lower. So this is definitely a continuing downtrend here. So now you see this continue to be lower. So far it's looking good. Now let's say this candle here is green, but the high here is still lower than this. So I'm not worrying about this yet. Not until the high get above this. Then if that is the case, then the next candle we may see the price reverse a little bit. But then most likely is the minute it hit this line here, which is my resistance trend line, it probably gonna get rejected because like I said before, I'm betting on this continuing this downtrend. So let's just observe this. See here, I mean, if you're looking at this in real time, sometimes people get nervous because they say, "Oh shit, I mean, this thing is reversing, and I'm losing money here. I bought it at this point, or I shorted at this point, or maybe I should like just cover it, just make a little bit of money here." You definitely don't want to do that. What you want to do is you gotta follow your plan. Okay? Just think of this way here. Before you make a trade, you have to accept that there's a very good probability that you're going to lose some money. Just think about like, hey, I'm going to lose money when I make this trade first. So that way you don't have to go and like panic about when you see this thing moving like that because that's what it does. It moved in a random but uh, follow a pattern. It's doesn't sound right, but a random but follow a pattern. But that's what it is. So you see this candle here. It get very close to this resistance trend line and it get rejected. So now we're starting to see it's trending down now. And it's good to see the high here is lower than that and the low is lower. So, well, it's trying to recover, but the sentiment, the momentum is downward. Now it's trying again. It's getting close to the resistance here, this trend line. And now you see it completely, it continued to drop. And I mean, when I look at this candle here, very high probability that it will continue to drop. Again, like I said, because the high is lower than the prior high of the candle, and the low is lower. As you can see right now, that's exactly what's happening right now. A lot of time when the price hit like the high of the first minute, there are cases that you could see it stabilize. And when you see it stabilize and starting to trend up, then you will know that it may reverse direction. And that's why the high and low of the first minute to me is very important to follow. And now it's broke down. You see it drop. So now it's getting very close to my target now. So now at this point here, I can exit my position. So as you can see, it started at 6:30 and now it's about 6:45. In 15 minutes, I'm already up, let's say here, 248, 245, 3 points. So if I trade 1,000 shares, I make 3 grand. If I trade 100 shares, I make 300 bucks. I'm done with my day right now. Okay? But I believe that this thing will continue to trend lower, and most likely it would close lower than yesterday, which is this point. So because of the fact, I mean, I set my sell target at this point, then I sell it. I just don't care, even if it dropped way more than that. The thing is really important is like you have to follow your trading plan. Trading is just like going to the casino. I mean, the casino is always open 24 hours a day. Trading, it's open every weekday. So if I make money here and now it continues to drop, don't get greedy and say, oh, geez, I missed out. Now jump in. If you jump in at this point, only to see it reverse direction, the next thing you lose money. Just be patient, sit and wait for the next opportunity. So you see, it's continued to trend lower. So this a really good example for the tip is to look at the momentum. If the prior day high was lower than the day before, and the low lower than the day before, and especially if the closing price lower than the prior day, then there's a very high probability that the trend would continue. So as you can see here, this is like a bull trap. People trapping you to think that, hey, this thing already dropped enough and now it is about to reverse direction. But that's not the case. Let's go up. It hit this critical resistance level, which is the 10 days moving average. As you can see, now it is continued to trend lower and lower and lower. My plan is to call for like exit at this point. So when I look at this, I say, oh man, I could have make another like $2 had I wait. But that is something that you have to control. I mean, you have to try not to think about that because I already make like 3 grand here. And had I wait, yes, I could make another 2 grand. Or what happened if all of a sudden this thing reversed and it go up? Next thing I know is instead of make 3 grand, it's down to 2 grand, down to 1 grand, down to like even, and then starting to lose money. The next thing happen is like I get worried and I say, oh man, now I'm down 1 grand. Maybe I should cut my losses. So instead of like having a winning trade, you ended up with a losing trade. So this is a really good example here. I mean, within the first 15 minutes, you can very much make the money that you want to make for the day by based on the simple momentum, how the stock is trading prior day. Okay, here I want to continue to talk a little bit about support and resistance. So now it's bouncing, it's dropping a lot. And all of a sudden now it hit what? It hit the low of the prior day. Now you see the price starting to reverse direction now. See, that's why it's so important to understand the support and resistance. You see now it's starting to trend up. I mean, this candle here, the high is higher than that. So most likely you're going to see another one go up. So the question now is, so let's say if I make my money at this point, and now I see a potential for this reversal, should I jump in and buy it? Well, I will go through this during the next live streaming because definitely, yes, you want to leverage a potential reversal because it's really depend on how the candle would behave. We may see this thing reverse and run even higher than this here. It's all depend on how the candle behave, and the way to look at it is by looking at support and resistance. An example, um, this line here that I draw earlier. Let me just make it thicker here so we can see it. Let me change the color too. Make it like this color here. There. Part of the part of this is when this thing bounces up, can it pass this resistance or not? If it get rejected, definitely I don't want to touch it. First thing. Second thing, is it the base or the low of the day, or is there a potential for the price to drop even further? What I need to do is look at how the candle would behave the next few candles to see whether or not there is a potential for a run up and then a retrace, and somehow if it finds support at certain point in time here where the low at this point is higher than this low, then this give me a higher probability that this could potentially be the low for the day. So the minute the price bows and get over my resistance trend line here, that is where I would go in and I would buy call option and then pretty much play on this reversal. That I will go over that in detail for the next live streaming. But as you can see, if we look like the first, let's see here, almost like half an hour, it's very much behave exactly how I anticipated during my pre-trading plan. I mean, you guys can say, well, it's easy for you to say that because I mean, we're looking at something happened in the past, but trust me, this thing will happen in the future as well. Okay? I would say at least 65% chance that it would follow the same momentum. People lose a lot of money. Why? Especially retail investor, because they run into this sort of like trick, like the bull trap here. They see the price running up, they chase after this without realizing that, wow, it's just a matter of time before this thing would drop. Hey, brother Brian. So, all right. So we just look at this for another like, I mean, 5 or 10 minutes. Then that's pretty much like for today's trading. What I'm gonna do is, like I said before, I will have a other live streaming session. So if you're interested in like trading, I mean, you can follow this and then just download Think or Swim and observe. So now it dropped below this. We'll see whether or not it's going to bounce up, and then the yesterday's low would be the kind of like support this thing have or not. Hey, Camelo, how are you? So this candle here drop, you see this big drop, but now so far for these candles here, I see the low is higher than this prior low. It really depends on how this thing closed. I mean, let's say if we have this candle here ended up like this here, then there's always that potential for the next candle to start to stabilize and trend up. Okay, there's a high probability as long as the low is higher than the prior low. We tend to see the price slowly stabilizing. There it is. You see that it's slowly stabilizing. There. Now, if the high get to this point, which is higher than this prior high for this candle, then there's a chance this thing would start to bounce up like that. So yeah, observing this candle is really important. There it is. So now there's a high probability that you see that. Let me let me zoom it out. This is really important, guys. I mean, predicting how the price would likely. There it is. Now the high here is higher than that. The low is higher than that. Most likely we're going to see another up candle here, or the next few candle would continue this uptrend. What I'm going to do is I'm going to wait until this thing hit this, just to see if it's going to get rejected or not. If it get rejected, that just proves to you that by just looking at this few, we started with like, I mean, the first few candle, and just by drawing the line between this high and this high, we can pretty much kind of like project the downward trend line. So, let's just wait a couple minutes to see if that's the case or not. I mean, most likely the minute it run up to this point, it would get rejected. So you see, I mean, really, um, charting is not difficult, but you have to spend the time and try to understand that. You see, it's pretty much trending up here. Okay, all right. So that's pretty much like pretty much what I want to talk about, like in terms of like day trading for today. And then next time, I mean, I'm gonna see if I can do again tomorrow at like 3, and I will go over like um, well, today we take advantage of the downward momentum to either like short or buy put option, leveraging this. And then tomorrow I will talk about like, I mean, looking at the chart and determine whether or not there's a potential for a rebound, and then leverage this to make a trade. So I mean, so that's what I do normally during a day. I mean, I make 2 trades. But if I make enough money, I mean, every day I have a goal of what I want to do. And the minute, let's say with one single trade, and I make like my goal, then I'm done. But if not, then I'll just patiently sit and wait. I mean, think of it this way here. I mean, trading is just like you go hunting. You might have to like lay there and for like hours just waiting for a deer to show up. Sometimes you wait like 8 hours and then nothing. Trading is the same thing. You have to wait until the setup is right. And when the setup is right, that's when you want to jump in and open, I mean, and or like establish a positions. People lose money because they do it random. So they, let's say if it's dropping, then they see, oh, the price is going up, then maybe I should buy. Only to see the minute they buy, it drop. And for me, I am not like buying here. Why? Because I know right now the price is still affected by this downward trend line here. Until the price get out of the resistance of this downward trend line, there's no way that I would want to buy in at this point. All right, so we'll kind of like stop at this point here because next live streaming session would be really good to look at this as a potential reversal trade. Any questions about like trading? Any questions about what I just went through? I'm going to answer a couple of questions really quick. All right. uh, if there's no question, what I'm going to do is I will talk very briefly about um, Bitcoin. So, I mean, to look at Bitcoin, I have to use TradingView because Thinkorswim doesn't support crypto. Well, there's no doubt that like Bitcoin is still under a lot of like selling pressure with the stock market, the fear of recessions, and then on top of that, you have that big problem with Luna, which is really scare a lot of like retail investors. So right now in people's mind, I mean they're scared of crypto. And that is putting a lot of pressure, I mean a lot of selling pressure on Bitcoin. But so far, Bitcoin kind of like, I mean, it's stabilizing. The chart is definitely not looking good as long as the price is trading below this red line, which is the 10 days moving average. There is still a chance for it to drip lower. And I mean, just like do this real, just look at this really quick. I mean, I have a high point here, high point, and if I just draw this line, I mean, it's still inside this downward trend. So Bitcoin, it's not looking good. But the good thing is like last time when there was a major drop to about like 24,000, we see a lot of support. I mean, buy a step in, and it closed at this point, which is about like over 28. The same thing today. It dipped to about like 28 immediately. I don't know if you can see this. Let me just zoom in because you see this like long-legged candle. So at least, I mean, there is support. Hopefully, with the good news regarding to like retail sales, I mean, the stock market closed higher, that Bitcoin would follow that and trend higher. So for now, like I said earlier, I mean, for me, crypto is not gonna go away, but it is different than like a year or two ago. I mean, a year or two ago, people make a lot of money, pretty much buying anything. They buy shit coin, junk coin, or whatever. They still make money. But now it is different. I mean, after Luna lost 45 billion, uh, people are scared. So it's really important that, when you buy into crypto, you have to buy into something that have certain real life utility. Just don't buy a coin because, I mean, some YouTube influencers tell you that this thing is gonna like 100x, like Tiger King coins and baby Lambos and all those shit stuff. I mean, shit coins. What you need to do is like focus on projects that you know that will last for a long time. Okay, and if you do that, just be patient. You will make money. Why? Because I mean, good projects does not go away. The minute the market stabilizes, it will bounce. I mean, you've seen like some of these coins that go up 20, 30% the minute Bitcoin goes up like 2 or 3%. Um, so just be careful. I mean, just, do some due diligence. Just don't buy because the price is so low. Okay, just don't buy because somebody tell you, oh, there's a project. God no, um, the price is like 0.00001. So put 500 bucks in, and you get a billion coins. If it go like to $1, you would have like $1 billion. I mean, that is dreaming. You probably do better buying the lottery ticket than buying that. As long as the project does not have any real use case or any utilities, or if the people behind the projects are unknown. I mean, the key is like, if you analyze a project and if you go to their website, you don't see who behind the project, then don't even touch that, because the success of the project is really depend on the founders, the people behind that. Um, and another thing is like with crypto, it doesn't take that much. I mean, for this thing to bounce, the minute the stock market stabilize, I think Bitcoin would stabilize. And when Bitcoin stabilize, it would, slowly trending up. When it does that, good projects will definitely move. I mean, I talk a lot about like um, Zilliqa. I mean, I love this project. Okay, right now, it went up a lot. It went up to like to 24 cents. It's it retraced. Why? Because the rest of the market is. But technically, when you look at this chart, I mean, it still looked very good, because so far, I mean, when you have this golden cross, it's still there. Okay, it's just right now. I mean, all the cryptos are in the doghouse. But the minute Bitcoin stabilize, I expect this thing to move, because it is a great project. I like those dash. Why? Because I like the team behind that, and I really like the um. I like the plan for it. And right now, I mean, it's the price is just so low. Um, to me, it's a really good project to. I would say more than just gamble on. Um, that is something that you can put some money in, and then there's a chance that it could give you really good return. Um, so um, let's see here. I mean, right now it's like 4:30, so we've been streaming for about an hour and a half. Um, I have to run now. I'm gonna try to see if I can schedule for tomorrow. I mean, at 3 again. If not, then Monday. I'll make sure you follow me on Twitter. If I decide to stream tomorrow, I'll announce that. And then maybe tomorrow I will go over like I think all the coins. I see questions about like BTT and Polygon, Cardano, and all that. We'll talk about that during Q&A tomorrow. But yeah, I think that I will continue to talk about like the uh, the technical analysis and example, uh, day trading and stuff like that. Hopefully that's gonna help. All right, guys, I have to run now, so I will turn off now, and I will talk to you guys later. It'd be great if you guys can put some comments on this video. I mean, if I'm boring, or if there's any like certain topics that you like to hear, or hear more or hear less on, let me know, guys. All right. All right. See you later.